For decades, the UK High Street was the beating heart of our towns. Shops, cafes, banks, community space. But in 2025, that heartbeat is fading. Retail casualties are mounting. Town centres that once bustled are emptying out, and entire high streets are becoming ghost town skeletons. You're about to see the 10 towns where the crisis isn't coming. It's already here. Stay with us, because what's falling apart now may never come back the same way. Walsall, once a thriving heart of West Midlands retail, now shows unmistakable signs of decline. In recent surveys, the central town centre vacancy rate has been cited at around 25%, with 1 in 4 retail units lying empty. Major national chains that once anchored the high street, Debenhams, Marks and Spencer and others, have pulled out entirely or drastically scaled back operations. That exodus has left a hollow ring around the core shopping area. Boarded up units, charity stores in formerly premium space, and footfall that feels thin on peak days. The causes are clear and stacked: rising business rates, crumbling centre infrastructure, competition from out-of-town retail parks, and a shift in consumer habits toward online shopping. Combine that with higher household bills, so fewer casual high street visits, and Walsall's retail damage multiplies. Many independent retailers report tougher conditions: lower margins, rising overheads, and longer void periods between tenants. Even the planned regeneration schemes, while ambitious, now feel like catch-up rather than growth drivers. For local residents, this means a changing experience. Fewer shops, fewer services, more empty storefronts. And for investors or Channel Right Now watchers, Walsall has become an emblem of the UK high street crisis. It's not a small town with a tiny issue, it's a major market in a major region facing a major reset. Bolton's retail heart is undergoing a transformation, but not the kind local shoppers necessarily hoped for. The landmark Crompton Place shopping centre, once a beacon of retail activity, is slated for full demolition in 2025. The 280,000 square foot complex, long seen as a retail anchor, is being cleared to make way for Hart's mixed-use development: housing, leisure, and offices. The fact that this bold move is happening speaks volumes. A retail centre this size is being taken down because the tenant base has collapsed. The wider story of Bolton's high street echoes this shift. Overbuilt retail stock from the boom years, plus a reliance on big box and chain-type tenants, has collided with changing consumer behaviours. Online shopping, reduced footfall, and macroeconomic pressure are biting hard. Population growth is modest, earners are under strain, and the once safe assumption that people will always shop in the town centre has cracked. As units remain vacant and new development is pitched toward homes rather than shops, Bolton is transitioning from retail first to resident first. Investors reading the scene will see risk. Traditional retail return is no longer assured. Value lies in reuse, redevelopment, and long-term hold rather than quick flips. In 2025, Bolton is much less about shopping destination and much more about town in reinvention. Boston is a smaller town, but its retail story intensifies a broader UK high street trend: declining department stores, shrinking tenant demand, and rising vacancy. The town lost its historic department store, and in recent reports, it was noted that the commercial vacancy rate is over 15%, while footfall index measures sit at approximately half the national average for towns of similar size. That means a quarter or more of shops are either empty, underused, or being repurposed. The ripple effect is potent. With fewer visitors and weaker local spending, the remaining retailers are squeezed. Rents aren't rising, incentives multiply, and community amenity value shrinks. Investors who once saw Boston as a value play now face a tougher equation: maintenance, refurbishment, and marketing matter more than simple location. And for the local council, the challenge is obvious: how to transition the centre from all retail to mixed use before the decline becomes structural. For viewers and investors scanning for signs of broader collapse, Boston is instructive. It's not a large city with deep markets. It's a town where the change is more raw, more visible. Empty shops, less traffic. A high street once defined by local loyalty now feels like a branch of national trends: overstore, under-consumer. In 2025, Boston's cautionary tale is clear. If you rely on retail tenant growth, you may be facing the wrong bet. Dudley's retail decline is no secret. As of April 2025, the town centre vacancy rate hit around 16%, with the dominant business types shifting. Charity shops, takeaways, and boarded-up units proliferate, while national brands continue to downsize or exit. Once a strong retail hub, Dudley has seen major retailers leave. Multinationals who used to anchor the high street are now visibly absent. The shopping centre boom of the 1980s and 90s sucked regional retail away and left the high street hollow. Now the same dynamic plays out again with online competition and economic constraint. The effect on place and perception is significant. Fewer shoppers, less spend, and rising signs of neglect. Maintenance falls behind, units stay empty longer, and once thriving streets feel quieter than they should. Local councils acknowledge the challenge. Revitalization plans are in motion, but the investor and tenant confidence gap is wide. For landlords and would-be buyers, the message is stark. Retail lining units in Dudley carry risk, not expectation. Dudley isn't unique, but it's ahead in the narrative of UK high street erosion. The issue isn't just shops closing, it's amenities fading, community space thinning, and the high street being displaced as the default local gathering point. In 2025, Dudley stands as a sample of what happens when retail transitions out and nothing else fills the gap. Newport carries the unenviable tag of having the highest empty shop rate in the UK, with roughly 19% of units vacant, more than double many healthier city centres. Simultaneously, local spending is leaking out. Nearly 5% of high street expenditure reportedly flows to neighbouring Cardiff, reflecting both the local supply shortfall and changing consumer behaviour. The physical signs are striking. Boarded-up storefronts, faded signage, and formerly bustling parades now looking quiet. Economic context matters. Wales sees slower wage growth, higher commuting costs, and a shift away from city centre shopping in favour of out-of-town retail parks. In Newport, this translates into weak tenant demand for prime retail units. Numerous national chains have scaled down or exited entirely. Meanwhile, smaller independents struggle with reduced footfall and higher costs. For property watchers, Newport is significant because it blends size, population over 150,000, with high vacancy and weak retail draw. Many smaller towns face similar issues, but few at this scale. The challenge now: regenerate the place, maintain alternate uses like leisure, culture, and housing, and avoid becoming a modern-day ghost high street. For 2025, Newport is front line in Britain's retail reckoning. Middlesbrough once stood as Teesside's retail capital, a magnet for shoppers across the northeast. But in 2025, the streets tell a different story. Retail unit density here is now almost double the national average, the legacy of decades of overbuilding when high street demand seemed endless. The result? Far too many shops for far too few buyers. Even with the Cleveland Centre and Hill Street Shopping Centre still trading, entire stretches of the town are dotted with shuttered fronts and "to let" signs. Footfall has fallen sharply since the pandemic, and despite small spikes during seasonal events, weekday trade remains thin. The shift to online retail, combined with rising parking costs and falling disposable income, has drained the casual shopper base that once kept local independence alive. Retailers report slimmer margins, shorter leases, and higher turnover of tenants. Developers and the council are pivoting fast, converting redundant retail into housing, co-working spaces, or education hubs. But the transformation is uneven, and time is running out. Middlesbrough's challenge isn't just economic, it's psychological. Residents say the town centre feels smaller, more hollow than it used to. In 2025, Middlesbrough represents the new face of retail oversaturation, a town with too many shops, too little spend, and a future that depends on reinvention, not retail. Tenbury Wells may be small, but its story is devastating, a symbol of how environmental risk can destroy even the most charming British market town. Floods in 2007, 2020, and 2023 hit the high street hard, damaging shopfronts, cutting off trade for weeks, and driving insurers to the exit. By early 2025, several key properties remain uninsured or uninsurable for full flood coverage, leaving small businesses exposed to total loss if another disaster hits. The human toll is visible. Once thriving local shops, butchers, florists, antique dealers have shut permanently. Some never recovered from the 2020 floods, others from the energy cost shock of 2023. Vacancy rates here have quietly risen above 15%, high for a small rural town, and with insurance withdrawal, few entrepreneurs are willing to take the risk. Local regeneration plans exist, but rebuilding momentum requires more than infrastructure. It requires confidence. Without insurance, lending, or reliable footfall, Tenbury's traditional high street model simply doesn't work anymore. Online retail fills the gap for residents, and visiting shoppers are down by nearly half compared to pre-pandemic figures. In 2025, Tenbury Wells stands as one of Britain's most fragile high streets, not because of neglect or mismanagement, but because climate pressure and financial withdrawal have combined into a perfect storm. Unless flood resilience funding expands, this picturesque Worcestershire town risks becoming Britain's first true high street casualty of climate change. Blackpool's reputation as a seaside playground once guaranteed retail success. But in 2025, its tourism-driven economy is struggling to stay afloat. Visitor numbers have declined from pandemic highs, and the mix of budget tourism and cost of living strain means holidaymakers are spending less. The retail vacancy rate in central Blackpool hovers around 17 to 18%, among the highest in the northwest. Arcades and souvenir shops, along the sole of the promenade, are closing in clusters. Independent retailers say electricity costs and reduced footfall have turned summer trade into a fight for survival. National chains have cut presence or consolidated into retail parks outside the centre, draining more traffic from the heart of town. The irony is that regeneration work is visible. New hotels, tramline extensions, and the Blackpool Central Leisure Project are all underway. But those investments have yet to lift the high street itself. Locals say footfall hasn't returned to pre-2019 levels. Retailers reliant on tourist spend now face long off-season droughts, forcing year-round fixed costs against seasonal income. Blackpool's crisis isn't just economic, it's existential. The seaside retail formula that worked for generations no longer fits post-pandemic spending habits. Unless tourism spending rebounds or retail pivots toward mixed leisure and local living, this iconic resort risks becoming a seaside city with a ghost high street. Wigan sits between Manchester and Liverpool, but its retail outlook feels worlds apart from either. Over the past decade, the town has accumulated an oversupply of retail units relative to its population. That imbalance is now biting hard. The Galleries shopping centre, once Wigan's retail anchor, was closed and is being redeveloped into a mixed-use site, marking the end of an era. With the demolition phase underway, central Wigan has lost its main footfall magnet, and while new residential and leisure plans promise long-term revival, the short-term pain is immense. Empty shopfronts line surrounding streets, and small independents report double-digit drops in trade since 2023. The vacancy rate now sits close to 20%, higher than the national average. The broader problem is shifting spending power. Locals increasingly shop online or travel to larger centres like Manchester or Warrington for big brand retail. That drains millions in annual spend out of the borough. Local councils are pushing hard on repurposing, turning empty units into pop-ups, cafes, and cultural venues. But economic gravity is against them. For a generation, Wigan thrived on accessibility and tradition. Today, its high street faces an identity crisis. Without a strong anchor or footfall strategy, even the redevelopment risks bypassing retail altogether. In 2025, Wigan stands as a warning. If your town builds more shops than it needs, the oversupply eventually hollows it out. Mansfield was once the shopping capital of North Nottinghamshire, a proud regional centre with one of the first purpose-built indoor markets in Britain. But by 2025, the centre is a shadow of its former self. Vacancy rates in Mansfield's main shopping zones have climbed to roughly 15 to 18%, with national names disappearing and independents struggling to fill the gap. The decline traces back to a familiar combination: high business rates, reduced footfall, and competition from retail parks and online giants. Since 2020, at least half a dozen major chains have exited the town, from Debenhams to Wilko. That exodus has left a patchwork of empty units along Stockwell Gate and the Four Seasons Centre, now struggling for relevance. Footfall data shows weekday traffic down by a quarter since 2019, and weekend trade no longer enough to offset losses. Local authorities are experimenting with transformation plans, more residential, more leisure, and digital hub conversions. But those projects take years. In the meantime, traders say costs are up 20%, sales are down 10%, and optimism has faded. Mansfield's story mirrors dozens of other medium-sized British towns, too dependent on retail, too slow to adapt. Its location and loyal community offer potential, but 2025 marks a crossroads. Either regeneration finds traction soon, or Mansfield risks joining the growing list of once thriving market towns now defined by shuttered shop fronts and empty squares. There you have it, the 10 towns where Britain's high street crisis is moving beyond risk and into reality. Empty shops, rising vacancies, vanishing footfall. For residents, it means fewer services, fewer places to meet. For local economies, it means the ripple effect from retail to business to job losses is real. If you found this eye-opening, hit subscribe, ring the bell, and share this video. Because the story of our town centres is changing, and the UK dream will be here to track it. Thanks for watching.